Hey, good morning. Let's go over today's trade plan. So the volume continues to be very low. We are still in this holiday market, but overall, the buyers are still holding it up pretty well, and we know that on the larger time frames, the buy side is still in control. Typically, on the last day of the year, we'll see a continuation in direction of trend. So given that the buy side has been in control, this morning we could simply see a continuation higher and a gap fill of 86 and a tag of 86.75 naked VPOC. So off the open, if you're trading this low volume market, then keep an eye on 2078 to 2079 half pre-market support. That's going to be an important area. And as long as the market is holding above it, we know that the buy side can remain in control. And then on the upside, we could get a move back up towards 86 and 86.75 to 88.75 with potential to even make a marginal new high. So at this point, the safer trade is still going to be on the long side, just because even if we head lower, there may not be a whole lot of follow through on the downside. Again, typically we do see a continuation in the direction of the primary trend, and at this point, the buy side is in fairly firm control on the larger time frames, and I don't really see that changing on the last day of the year. So, as long as everything continues to hold up and there aren't any major warning signs that, there's a lack of strength in this market, we could simply balance and slowly make our way back up towards the 86 to 87 area. As far as the econ goes, we have Chicago PMI and the pending home sales numbers due today, and those can serve as a short-term catalyst for a directional push. Again, volume is very light, so we're not looking for a big move here, but that whatever movement there is could still be towards the upside. And again, as long as there aren't any major warning signs, that is going to be the primary direction. Now, on the downside, if we do break below 78, we have the previous close, 76.75, and then the initial support zone at 72.5 to 74.5. And because the overall trend is still to the upside, buyers can really step in on pretty much any pullback into support. This is still a very bullish market. Nothing has really changed. We're simply balancing in a range over the last few days, and the market hasn't really broken outside of that range yet. We're still pretty much just range bound. So keep the volume situation in mind. That there's really not a whole lot going on right now, and this is a holiday market, which means if you're trading it, be selective, be patient, and focus on getting good trade locations so that even if the trade takes a couple of hours to work out, you're in from such a good price that you can patiently sit with it and let the market actually work and hit your target. If you get in from an aggressive price, it can be a bit tougher to hold on to that trade just because of the level of chop and the time the market spends just balancing in a range can sometimes knock people out of the trade if they're not in from a good price. So those are really the main thoughts heading into the day. Again, keep an eye on 78 to 79 half. As long as the market is holding that, there's still that potential to move higher. If we break it, it tells you that we're still in more of a balanced type market. We could go down to 72 half to 74 half, maybe even 71, 75, and perhaps then find buyers down there. And as long as there aren't any major warning signs or completely negative internals with downside momentum, I think that the buy side is still the safer side to trade. And if you're taking a short, just know that you are going counter to the immediate trend, counter to the larger time frames. Now, as long as you have good location, that side could still work, but you just have to know the type of trade you're getting into. So those are the main ideas on the day. If you're trading this, good luck, and enjoy the rest of the day. Happy New Year, and we will talk Friday morning.